Episode 23 of our PerFinEx Community Investing, and we have a world record to celebrate, depending on your perspective, I guess. The certificate goes to Christine Lagarde, the president of our European Central Bank, for raising the key interest rate to the highest it's ever been in history. Let's talk about that, what the US Central Bank is doing in contrast to our central bank, and how our investing strategies reacted to all of this in this PerFinEx Community Investing episode. Before we start, we did a rebalancing of the investing strategies before the last episode with order proposals. Most of you guys logged into your Fidelity account and accepted them to follow the new portfolio distribution. So far, so good. But 22 people didn't. So please, if you're any one of the 22 people and haven't logged into your Fidelity account over the last 3 months, log in and accept the order proposals. That's why we make these videos actually and send them to you, to your email address as well, so we can adapt to changing market environments. In the last episode, we discussed that the US Central Bank Federal Reserve increased their federal funds rate by another 0.25%, which got us speculating if our European Central Bank would do the same. Turns out they did. Our key interest rate in the euro area was tying the record from the year 2000 of 3.75, that was already in the last episode, and now since September 20th, we have the highest interest rate in European history with 4%. What does this mean? Apparently, they still don't like the inflation rate, even though it continuously is going down to the 2% target. Which doesn't mean the prices come back down again, because the way that inflation is calculated. Remember that. October's inflation rate of 2.9% means that this October's prices are 2.9% higher than last October 2022. The chart looks like something is going down, and the news are saying inflation is going down, but that doesn't mean the prices are going down. Our interest rate goes up, and the yield of the most widespread financial security in the entire world, the 10-year US Treasury, is, or was actually, at 5% in late October, which is a very psychological barrier that gets people scared. Why? Because it's the last barrier before the 6% yield, where the so-called experts say that the world starts to destruct itself. Let's lay this out. The Federal Reserve bought trillions, with a T, trillions worth of US treasuries over the last plus 10 years since the global financial crisis, resulting in the largest interest rate decrease in history to 0% because there was trillions of dollars of demand for US debt. And it's not just the US, by the way. Our European Central Bank and the Bank of Japan did the same. And now the Fed tries to get rid of all this debt they just bought a couple of years ago. And what's gonna happen? Yields that were previously crushed by them are now starting to explode. And everybody's running around like headless chickens, wondering what is happening. Is it just me, or is this completely ridiculous? I'm not trying to be any aluminum foil tin head guy telling you that the earth is flat, don't get me wrong, but can we agree at least that the interest rate is politically manipulated, or at least politically motivated? And central bankers have all these so-called problems because of the situation they were digging themselves into with decisions that they made previously. Do I know a better solution? No. I'm just sitting here making videos explaining this to all of you. I would just appreciate a little more honesty from central bankers and a little less panic from the media. So, what do we learn from this? Stop listening to the media if you don't want a heart attack. That's what I'm saying in almost every video. And try to make the best out of the situation. I know you don't like the rising interest rates if you plan to buy a property, but at least savings accounts have quadrupled their interest rates. So, try to make the best of the situation. There's nothing else you or me can do otherwise anyway. Alright, first investing strategy, our high safety portfolio. The last 3 months have been kind of flat with a slight uptrend, and that's why we are blessed with a green chart in this episode. And you know how much I like my green charts. No taxes and green charts. That's all I need to be happy. With the next dividend coming in December, dividends this year will be also 12.8% higher than last year, giving people invested in this strategy a nice income boost. Or you choose to reinvest the dividend straight away, which is, I think, what everybody has enabled. So you get a savings boost instead of an income boost. And please ignore the plus 80% dividend increase in 2022, because we started the community investing in August 2021 only. So the number is not real, because 2021 wasn't a full investing year. So what's the bottom line? 2021 was pretty good. 2022 was pretty bad, thanks to inflation, interest rate, and the war in Ukraine. You know what happened. And 2023, it's looking like this could be our best year so far. I don't want to jinx it, so let's go to the next investing strategy, which is your guys' favorite investing strategy, passive income. As this is more stock ETFs and less bond ETFs, compared to the high safety investing strategy, we are down about 3% from the last episode. But still green. And with the dividends that are coming in November, which is going to be the second best month of the year, by the way, and December, we are just ever so slightly below the dividends of 2022. Sucks. I would have loved to give you all green everywhere, but the price gain is a lot better than in the previous investing strategy, so you investors are doing just fine. And of course, this is a tremendous year for investors overall, which goes to show you, again, what many successful investors say all the time, and which I try to teach you as well. Investing is a long-term game. Maybe some of you remember that one person that I was talking about in an episode a while ago, mid last year, something like this. The one investor that jumped out saying, the stock market's falling and the negative news and whatnot, it's too much. Look where we are now. I'm not saying it's always like this. We could have still been in the red now, of course, but then it would get green again in the next year or the year after that. Who knows? But the world will recover at some point. And that's what investors in the high return investing strategy are still waiting for. Wow, 10 out of 10 transition, huh? Last episode, the chart was green. Now it's red again, with the stock market falling almost the entire 3 months since the last episode. But remember what I just said. Keep investing even when the market is going down, because that will leverage once the market's going up again, which will inevitably happen at some point. And dividends are coincidentally also up by 12% compared to 2021, so congrats to all investors. Now we just gotta get the price gain going in the next couple of months, which, historically speaking, Christmas time is really good for the stock market. So let's see if Santa Axel can deliver some presents for you. If you would like to receive maybe some presents too, you can open your free Fidelity investment account in just under 5 minutes, all completely online. And please remember to identify afterwards, either offline with Postident or online with the Video Ident app. And then a couple of days later, when Fidelity set up your account, we'll reach out to you and then let's discuss your perfect investing strategy. Happy weekend and see you in the next episode, party people!